Now coming to case 2. In the very same question, the case 2 says that the bill is discounted for rupees 48,000. Now remember students, the drawer always has an option of either endorsing this bill or getting this bill discounted. So in this case, A has got this bill discounted for rupees 48,000. So what are the journal entries? Again, we will start on 1st January 2007 by recording sales. B debited to sales. Since the goods are being sold to B, narration would be being goods sold. And the amount recorded would be 50,000. The question further goes on to say that the bill was drawn on the same date. That means on 1st January 2007 itself, a bill was received. Bill receivable account debited to B. Since bill was received from B, entry would be bills receivable to B. Being bill received for 3 months. Now students, remember that they both are personal accounts and the rules of personal accounts have been used here. The rules of the personal account are debit the receiver, credit the giver. The amount of this bill would be 50,000. Then it further goes on to say that the bill was discounted for rupees 48,000. Now students, on the same date, that is on 1st January, the bill has been discounted. Entry would be bank account debited discount account debited to bills receivable. The amount for bill receivable would be 50,000. It was discounted for 48,000. So in bank, the amount would be recorded as 48,000. And it is clearly seen that the discount is worth rupees 2,000. So the narration in this case would be being bill discounted. Now students, what about maturity? When the date of maturity will come in the month of April. Remember, this bill is now with bank. A no longer holds this bill. Since the bill is with bank, the payment would be received by bank and no entry would be made in the books of A.